What a difference a week makes. The markets have been gripped by a level of volatility that we have rarely seen. Over the last 2 weeks, the VIX, the stock market fear gauge, has seen an 88% increase. And this is now catapulting us into the top 10 historical moves on a percent basis ever recorded for the stock market. So this type of environment that we're seeing is really what we call lead 4, a heightened level of turbulence, of risk, and really what it shows is a slowing of our economy, which we saw last week, and now a slowing of inflation. So this is really all of a sudden starting to be a disinflation environment, and that is also different than what we've been talking about, but we have to go with where the data is leading, and right now is not coming out with a very rosy picture of the future. So the epicenter right now of everything that's going on, yes, there are some US-based issues, but it's Japan. And this is something, again, that's been different because really what the data is showing that we were supposed to be growing in Japan. But all of a sudden, the Nikkei, the Japanese stock market index, has plummeted 13% just overnight alone, and this is now making the largest two-day crash in its history, about 26%. So this dramatic sell-off is really sending a lot of shock waves around the markets and around the world. And then when we start to put in the volatility, it triggers a lot of forced selling, or what we call liquidations, by a lot of investments, funds, institutions, hedge funds, all of these different areas. And then it becomes really exacerbated by the fact that we have the wrong response from our Federal Reserve, which was really insisting in the last meeting that we would not be cutting interest rates as much as needed, and that things were doing better than what they had anticipated, but they didn't want to cut rates yet. So now what's starting to happen is that the economic data points are starting to rapidly slow. You have all these extra movements that are starting to happen, and that could force the Federal Reserve into doing something that they never thought they wanted to do. So then what happens is that we add to this chaos by an unwinding, so to speak, of all of these positions. And think of it as a way that these institutions and large funds have borrowed a lot of money, specifically actually from Japan and the yen. And they use that borrowed money to fund a lot of different aspects. And what's happening now is that whole trade, that whole borrowing of the money is unraveling. So think about it just in the way that you have borrowed money to go on a massive, massive trip, and as well as put a huge upgrade onto your house, a huge addition. But now, just as you're finalizing that addition, all of the money that you wanted to use for that is being called back by the bank. And they're saying, we want our money back. And that's really what's driving a lot of this selling around the world right now. So there's a lot that's going on. Well, also the bond market and the state of affairs there is really in a state of upheaval just because of all this, and then the Federal Reserve's stubborn stance. So yes, risk is really out there right now, but the one thing we need to be looking at is the price of gold. Now here's why. Because gold right now is still relatively stable. But if we start to see that gold is really starting to sell off, that really could start to mean that it is exactly what we feared, that there's more selling that needs to happen in the stock market, and they're using some of their gold to repurchase and to pay back some of those loans. So if that doesn't happen, and if gold stays where it's at, then most likely the selling has and will be subsiding. So if it doesn't happen, there's a lot of other things that could really crop up, and it could be a little bit more of an uncertain period of time going forward. So this is something that, yes, we have known about, but not really been highlighting a whole lot about here in these videos. The turbulence and all the different aspects there. But here's what's going on. We're really starting to remove all of these aspects out of the portfolios. So just last week alone, we removed all of the Japanese stocks. So from about Wednesday onward, we sold off all of our positions in Japan. And that was a really good feeling just to have that out of the portfolios. But then a lot of the growth stocks that have been working so well for the last year, those also are ones that we were selling out. And with that, we were staying more defensive in cash. So we have yet to reinvest back into other areas, and we don't need to be quick in doing this. Right now is the time to be a little more safe, a little more cautious, and allow some of the things to play out. Because this level of volatility doesn't go away overnight, but will provide opportunities to come. So this is, like I said, the time to be patient, but I encourage you to give us a call and we can talk through all the implications and the ways that we're moving forward from today. So with that, like I said, call us as you have questions. We're here for you. Take care.